All right, so let's begin today's lesson. So today's lesson, like I have said, it's about indicators, forex indicators. Now let's first understand what are indicators. Yes, because it's always good to understand the key terms into something so that you can analyze and understand it very well. So basically, from how big everything I'm explaining here, by the way, can differ from your PDFs. Yes, I know you guys PDFs that tell other things. But I'm going to say they might be not the same because I talk based on how they work and experience of how I've seen them, not on how they are written because they might write something but it's not the same way it moves. Yes. Now, just going to explain to you how I understand all of them. Now, for example, guys, an indicator simply it's something that tells you okay, like for me, sometimes I define indicators as things that define something. For example, an indicator to test if it is an acid. So the indicator will define the acid if it's true or false. So it's like a definition for the acid. It's of something like that. Now, Forex indicators are just future tools. They're like tools used in market to understand the future movements based on past. Now, this is where the problem comes in. Indicators are based on past, and that's the problem that most students and a lot of people face. Indicators are based on past events. They are not. They don't based on future movements. Yes, most indicators based on past to predict what might happen in the future, depending maybe on different movements. Now, basically, for us, we categorized those indicators into three categories. We have something called the momentum indicators. We had something called the momentum indicators. We also wrote something about called price indicators, something like that. So I'm giving you how we expanded them. Price indicators, even they also have another name. So we also have what you call the volatility indicators. So now volatility indicators, for them, we shall handle them slowly by slowly. Also momentum. In case time allows, if it doesn't allow, I'll extend it to my next lessons. Now, today we're going to look at a very good key price indicator. Now, you might ask yourself, what's with all those? Because I'm not understanding. Now, for us, we categorize indicators that use momentum of market. Now, for those of you who are confused with the word momentum, momentum is the power of market. Yeah, so if someone says what's the power of market, he means the momentum market is gaining. So, but even as people have momentum, you can start by jogging, eventually you run. So you gain momentum, the power, you keep gaining power as you move. Right? So momentum indicators, for us, we looked at indicators that use momentum as its main theme. Right? We also price indicators, for example, the MA, the moving averages, EMA, we also have the RSI. Then volatility indicators, we looked at those that use the volatility of market to determine different price levels. For example, we can talk about the HCR, true average, the average true range, yes, which is used by many traders to place their stop losses and all that. Volatility indicators are very nice to understand momentum. Now today for us we'll be looking at price indicator. So let's look at the price indicator, and my favorite price indicator has always been RSI. So now the RSI, of course, I've just placed here because it's under my favorites. So these are my favorite indicators. We have average, depth of market, moving average, convergence, and all that. So these are my favorites. Now the RSI is favorite. I'm going to explain why I consider it. Now RSI is a price indicator. For it, it's based on prices. So for it, it does its movements based on price. Yes. Now SI stands for Relative Strength Index. That's the full format of the word RSI. So if someone says Relative Strength Index, that's the meaning of the word RSI. Now, the RSI might be a confusing indicator to some people in the way they have been using it, but I'm going to break it down and give you to its simplest format on how we use it and how you can maximize trades based on it, how to get trend reversals using RSI, how to get trend continuations, and many more. Because RSI is a really nice indicator and a lot of experts use it. Now, RSI is a very key price indicator that I love. For it, it has numbers from 0 up to 100. Yes, it starts from 0 up to around 100 here. So almost all these prices, most cases, are percentages. These are percentage prices. Now the RSI works like this. It measures the previous 14 candle movements of market. Right, it's a 14-day period movement. It measures the 14 previous movements, and then it determines the future prices that might come in market, or to determine what we call overbuys and sells. Yeah. So I'm going to show you what they mean overbuys and sells. For example, here. For example, if you take a look at my picture here, there's something I want you guys to see. Let me expand. Let me expand this. We look at the RSI alone, then I'll bring my chart up. So the RSI typically looks like this. It has some kind of thing like a moving average moving towards, because it's moving with price. Then it has a very good thing that I love about RSI called its consolidation box. It has its range here. Yeah, the relative index. So it has a consolidation box. It moves in. Now there's something and it's quite true, because that's how it is most cases. Where the box starts from is always a 30%. Where the box ends is always the 70% range. Now you might ask yourself, you're like, why do they consider these two? Because this is 70%, yeah, and this is the 30%. You can see the prices are highlighting themselves on my screen. So that and 70%. Now the market, it's believed that if it moves under two ranges, the 70 and 30%, it's moving under stability. Like, but the asset itself, I can't say the currency. I wouldn't want to use the word currency. So the asset itself is moving and be like it's equal. But when market surpasses, it's believed that when market surpasses above 70%, it's always considered being overbought. Like, for example, of course, the motto has always been there ever since we are young, that too much of everything is bad. So too much of buying a lot of things is also bad when it comes to market. Yes. Anything that, by the way, even market dropping massively is also a bad indicator. So everything creates negativity at the same time positivity. So when buyers overbuy something, guess what? They need sellers to fill up their gaps. Like we talked about fair value gaps in all my previous lessons. So markets, when they surpass the 70%, the RSI, what it does, for example, here we spot a nice opportunity where the RSI kind of broke out. Not even, and it broke out even at this level, around here. It broke out here, even it kept breaking even around these other prices. Again, my demonstration too. It kept breaking here, here, and here. So all those levels were overbought. Like market was being overbought. Now, when markets are overbought, they need to come back to the range create stability in market. Let me tell you guys, I used to believe back then, I used to believe dollar was strongest currency. Yes, back then when I was still, in fact, not learning, I was at first, I had not even learned Forex. But I thought dollar was the scarce currency and no other currency would go against it. But guys, I assure you, even UGX, our UGX, Ugandan shillings, they are weak, but they can take the dollar to a downtrend. Yes, I have the chart. I have it chart here. Let me show you guys really quick. Let me show you the USD chart. You see what I'm trying to tell you. There's no holy grain within a space. I'll never be there and say that this pair is so strong that I will sell it or buy it because it's the strongest. Imagine this is UGX, the weekly chart. So they have been creating downtrend series. We have been overtaking the dollar, pushing it to lower prices. It's actually weaker than. It's very weak when you are comparing it to what to this dollar. The UGX is very weak. Now let me tell you, this is a PCD. So there's a statement that states that in market that there is no price in Forex that it is so high for the bears, and there's no price that is so low for the bulls. What they mean is that Market can never drop to an extent that no one will buy it. No, people like such. Now here, when something is overbought, it creates a large interest towards that market. So they will come into market to create stability. That's why we always see trends, uptrend, downtrend, up to create stability and fill up most winning parts, because something can be oversold when another party is not there. So the question would be now, if it's something is being overbought at a high rate, then where will sellers come in? So the sellers will need to come in. Let me answer my question. The sellers need to come in to fill the buyers' orders. Guess what? When sellers come in, create prices to push down. That's why you see every time it escapes up, it comes up to this consolidation box. At the same time, when this escapes up, it comes down. That's the RSI, guys. I'm going to show you how to use it. It's always considered that when you pass 70%, you can always look selling opportunities. Why? Sellers need to fill up the overbought orders. Yes, they need to come in and fill out the overbought orders. That's why most cases, a lot of people, you guys have been saying it sells. From nowhere, market buys. Feel like, wow. Sometimes markets are influenced by how the RSI moves. You might find that it has been overbought, for example, at this price. Let me give you an example here. Recap. So this price here is the same price. Let me draw a line straight here to show you how that high price was. You see now around there. So when I draw an intersection, you can see this peak it is the same peak where market is. And you see the theory that states it's true. You see that market, once it was in an overbought zone area, it had to create lower prices. Why? Sellers had to come in and fill the order. That's why if someone's here and saw market selling off, would be like, why is it selling off yet? I had a beautiful uptrend here. Reason being, market was at an overbought price. Yeah, most cases the RSI are always respected. But don't forget that in market, there's nothing that is 100% true. Let me go back to my RSI. I talk now. The RSI, the reverse is true. I like that word. The reverse is true that if it is now below the 30% range, it is believed that market is now at it has been oversold. So buyers need to come in and fill out orders. Hope you guys are picking that thing very well. So they need to come in, fill in the orders. So and so on, the RSI will keep moving and the stability over buys, over sells, and then keeps moving. And so on. You understand, guys? Now, guys, I want to assure you that most cases you want to be getting you guys, you like sleeper entries, and you want to get those points where market might turn over. But for us, we extended the RSI to believe that overbuys should at least exist at the 80%, to be on the side, and also to have lower stop losses. Oversells, you can always pay them at 20%. So when such two levels exist, when you see the two levels coming into market, and now it's into the over 80% of buys, you can always look for massive selling opportunities. When market is into the is below the 20%, has come to the 20% level, you can always look. Why? Because these two tested them time that these two levels are very influential when it comes to market movement. Let me draw the two lines. You see something here. You will even see that when market escapes, it does not escape big from the line. Hope you can see that ours are creating something like a resistance. You see here, it knocked and dropped massively. Let me pull to the chart. You see something. You see what happened around here, the 80%. So if you wanted to look for oversold, you see, if you took entries at our 80% level, you see where entry was. So I'm looking for that intersection candle around here. So your entries would exist around that. So giving you a very good sniper entry that would give a nice margin of 1 to 4. But if, for example, for you wanted to take entries at the 70%, there's something that you guys see. 70% is at this can intersection around here. This is the candle 70% intersection. So the 30% you see here, you see that candle, you have a bigger stop loss. So market sometimes likes violating 70% rule. It can even you see, imagine you have a very, very big stop loss that you even don't know where you place it. So it will create for crazy, crazy stop losses, and that's not what something we want. So always consider two levels: 80% and the 20% level. Now, guys, I basically do not advise indicators as strategy. Yes, I don't advise indicators as a strategy. Reason being, indicators are past cases. They come from the past events. Now, if you consider this as a strategy that already tells you what to do after 14 candles, it won't make sense. Always consider indicators and other things as what we call confluence. Now, you guys might ask, what's a confluence? Guys, a confluence is called the reason as to why you do something. For example, you know that, guys, the more the reasons you have, the better, or the more comfortable, or the more confident you become towards your trade. For example, if I have better reasons than you as to why I'm selling, let me give an example. Let's say that you say, I'm buying at this price. Why? This man, there's an investment formation. If I have not told that, I'll teach it. There was a fair value gap formation that formed previously. Liquidity market fetched. So you see, I'm having different reasons, and you can see around where market will approach, it will be approached towards the right, my RSI down levels. So you see, I'm having more reasons, but I've not considered my RSI as the major reason for buys. I've just considered it as a confluence. Let me go back to something here. I show you guys what I want to mean. For example, here, if you wanted to take sales, you see something. I want you guys to see something here that's RSI. So I want you guys to see something here where here. If you want to take entries, maybe if someone had come in and said, you know what, I've learned about confluence, I would maybe consider my supply level around this price. Consider around this supply level, that price, market came in, for you the candles, you see, market came in and started approaching overbuys, also approaching your supply level, giving you what indicator? A sell side indicator. So it gave you a sell side indicator after more than one confluence. So don't basically use these indicators as your main strategy, even though other people like considering them, but I don't advise it. I advise to use an indicator as a confluence towards your aims. Now, another interesting part about RSI indicator that I want to share with you guys is that the RSI can be used to determine trend reversal and trend continuation. Now, this might seem quite confusing, but it's true. Let me give you an example of how it works and how to use it. So let me first disappear this. Now, if market's trend line or the trend is moving like this, it's moving like that, then in overbuys and oversells of the RSI, its trend line is moving downside like this. We always consider the RSI movement that market will now start to create downtrend structures. It's just believed because it's by any indicator from the RSI. Correct, if it creates, I'm going to show you what I mean by creating this downtrend trend line. Don't worry. If market creates an uptrend trend line and this one creates a down one, we always consider the one for RSI. But a clever guy will always consider to wait for market structure shift. For example, you can wait for check characters, break of structures to consider you are now sure. But after getting multiple reasons, like from the RSI. Let me show you something here, guys, what I mean by trend reversals. Because I'd like everyone to be on point with me. Now I want you to see that when the I'm going to mark different time intervals. I'm going to intersect this overbuy. Let me put one line so that it looks nice. Then I'm also going to intersect this level that overbought here. I want you guys to see something. If I draw a line, if I draw a line here, as in a trend line from here up to here, you see market created a downside trend line. But you see the RSI, this is where the lovely money comes in. RSI created an upward trend line. This line is not straight. So don't get confused. They're like, sir, that line looks straight. Let me first remove this. It's not straight. Actually, it's a little bit up. So when it's a little bit up, it indicates that RSI has signaled an upcoming uptrend. That's why you see market created an uptrend. It obeyed the RSI. You see, after here, market created an uptrend. Now the question is, how would I trap market? I always tell a lot of them that consider the level you have got that lovely structure. Just get multiple, maybe you can say resistance, the change of character here. I'll get maybe different failure value entries after seeing market structure. The RSI itself will signal to you that for us we are ready to reverse to upside trend is coming. Now you can always use an RSI in case you don't know when the up is ending. In case of all-time highs, those of you who trade gold, yes, you can always use it. Now you see what happens here. You see, the market now creates an upward move to mean a strong uptrend is coming. When I try to intersect here to see where I can also draw this one, I can always intersect here. You see, once it goes into the overbuy zones, it has to obey and sell a little bit. You can even see this one spoke the same language with the RSI. Yeah? They all agreed for one. All agreed. So you can see they agreed that a quite punctual uptrend is now forming and it might create upward movements. So the more the move now, because what you need to know is that more the RSI shows a very strong when these levels escaped higher and it's showing such signals. The higher the moves, for example, one is higher than this kind of one. It's very punctual that might be a strong uptrend. And also the one thing you need to understand about the RSI, the reason why I consider this level now to mean uptrends coming, it means that overbuys existed previously, true? But then overbuy coming with a lot of power. Why? It now why okay, there those answers are in depth of market, and that's I've not talked about indicator thing depth of market. Now, when it creates this, it means that higher prices are being created over buys which are more than the previous. Meaning that now buyers are strong and are ready to dominate to the upside. Now I wanted to see what happens. The RSI signals a likely downtrend structure move. I want you guys to see what happens, and here it gives us that market is soon shifting to the downside. For us, a big-headed uptrend didn't show it. It kept telling us, you know what, I'm still in. You see, now you have missed this move, and this move actually had money, which is by the way, this is about 660. So you could have missed 600 pips without using RSI. If, for example, today, that day was 20th December last year. So if you had seen the RSI movement and the market movement, it will be a very big question the market might look for sells down. And you can look for swings. Yes, you can look for swing sales. They gave about 600 pips. Then, as more the RSI keeps creating different prices for it creates different movements. For example, here, after this level is done, you can always come measure this. You see this couple is a little up, meaning it might receive an up and small. So and so on and so on and so on. You can keep using the RSI just like that and playing with these reversal patterns in RSI. You can always play with them out. You can see once around this intersection, even let me draw for you guys an intersection. You see what happened once it created the lower price. You see it eventually dropped. Now summarize what I've been saying. Like I've said, we take entries on RSI indicators for sales or confluence sales if market reaches the 80% levels. We take buys if market goes to the 20% level, because that will even give you the tighter stop loss. We also take reversals, like I've said, if the RSI gives an indicator of that. Now you guys might have a question. Do I need to get the reverse when also market is above 80%? What? Now the reverse you don't need to use the 80% theory. But as long as market goes into overbuy zones, as long as it goes into the overbuy zones, you can always get reversal patterns with the RSI. RSI is a very big indicator, and you guys can always apply it into your charts. But guys, don't forget that everything, to apply it, you first test it out. I personally use Trader Casa. You can go to Trader Casa, back test it out several times, see if it can fit with your strategy. If you have a strategy, you might even find it, guys, by the RSI. Yes, the moving out is very good at your strategy. So you can always try different as in strategy. So the session we shall look at indicator, we look at most lovely indicator I use even in Forex. So it stands for crisis stroke divide. Now also look at that. It's a very can go same reason. As I want to let you know, everyone can trade, but not everyone can. Makes a mind rule, not a fixed chart rule. Knowing something ends does not be a profit. Those guys assure you that in market, basically, without lying, on 10 trades you need 4 trades to make money. But every time you force your life to make better trades, for example, you want to hit 10 trades, you keep hitting yourself. Because I used to ask myself back then, why am I so good at analysis to an extent that I can define everything in market, get the best setup, it plays out, but I make zero money on it? Then I sat down and realized that I knew how to trade, but not how to make money. Money comes with mindset. Money comes with how you manage your risk. That's why everyone can start a business, but not everyone can earn from the business. Yes, charcoal business has money until you start it up to see that it doesn't have money. So you need to set your mind, guys. Always journal trades. Keep journaling. Like, let me tell you guys, getting a setup and you shorten it like this. You see, let me give an example. Let me say you caught this move. Let me even give you guys, you know you love snipers. Let me say you caught this move here like this. You even caught a nice sniper. Market dropped up to here. I'm just giving you some coffee psychology here. Getting this move brings you to one question. How do you manage yourself within movement here? You know, this movement, guys, may seem to be from here up to here took 7 days to hit about, these are a lot of pips, by the way. Yes, they are about 1,100 pips. But to hit them, the question is, you took the setup, very true. But how did you treat yourself within the setup? That's where a lot of people lose money. When you treat yourself bad within the setup, you lose money. For example, what do I mean bad treatment? Let's say here, you started by putting a lot of load size. Do you know that within this car pullback here, it can blow your account? That's first thing that can pull back. Second thing, if you entered here and you saw market had dropped this candle and you put your break even here, show you put your break even here. Yet yes, because you had seen this market had dropped here. Do you see how you could have missed move when market came back and swept you out? That's a question to yourself. Also, it can drop up to here, but the question is, can you be in that trade? You might find yourself the trade ran to trading view, hit the take profit very well to an extent that you shared to all groups, but you didn't take the whole trade. Still, you can take the trade and you reach a point and you're like, I need to add layers as I move into market, and you end up blowing within these candles because these candles are day candles. So before you enter any trade, I always advise every student that ask yourself 3 questions. How do I enter? Yes. How do I enter this setup? Would I enter? And when should I enter? As long as that's in line together, so